Hello and welcome back to our channel. Today on India Business Insights, we are going to have a quick overview of the Indian economy and its updates. Let's start with the G20 summit. Despite lingering disagreements on the Ukraine crisis and climate change actions, the G20 summit surprised many. Some of the key moments from the summit include the welcoming of the African Union as the newest member, hence amplifying the voices of the global south. The African Union, with 55 members, boasts a collective GDP of $3 trillion dollars and a population of 1.4 billion. On the climate change standoff, G20 endorsed tripling global renewable energy capacity by 2030 and acknowledged the need to peak emissions before 2025 to limit global warming to 1.5 degrees Celsius. PM Modi launched the Global Biofuels Alliance along with the announcement of a mega India Middle East Europe shipping and railway connectivity corridor by India, the US, Saudi Arabia, and the EU, hence, will encourage and provide impetus to economic development through enhanced connectivity. With this massive economic corridor, are we seeing the beginning of the end of G7 as an old boys' club and the rise of G20? One could say India has earned a few brownie points because we were able to get a unanimous decision on the final declaration statement. At the same, remember that declarations are just the first step, but it's time to change the perception of all words and no actions. Before we do further, I would request all of you to like our channel and leave your comments in the comment section below. Next update we have about the RBI, rupee weakening or dollar strengthening. With the Indian rupee reaching a record low and the possibility that the rupee might fall beyond rupees 83 per dollar, RBI is defending the rupee. Compared to all other currencies, the rupee has been pretty stable and hence the dollar is strengthening due to the rising price of oil. India is an importer of oil, which has led to the demand for dollars being greater than the demand for rupee. With the focus on inflation, the RBI doesn't want the rupee to plummet. As per some estimates, every 5% fall in the Indian rupee increases inflation by 0.15%. The defense strategy of selling dollars and buying rupees can be seen at present being implemented. With the continued pressure on rupee, it might lead to dwindling forex reserves. For now, India is sitting comfortably with the FX reserves of USD 593 billion as of 8 September 2021, albeit down US dollars 5 billion from previous week. The window for rate cuts is closed for now, and the RBI is likely to be on hold for the rest of the fiscal year, with only a strong growth shock likely to stir it into action. India's quarter 1 GDP growth rates. Is productivity the name of the game? According to MOSPI, the real GDP growth rate at constant prices with base 2011 and 12, the April-June 2023 estimates was 7.8%. In today's LinkedIn lingo, we are the fastest growing major economy yet miss efficiency. GDP doesn't tell us how effectively or efficiently are we using our resources. For that, we have the incremental capital output ratio. In simple terms, it is the additional capital needed to generate 1% higher output, which could either result via technical progress or an increase in capital productivity and better capital allocation. Currently, we are at 4.4. India seems to be heading towards the sweet spot of 3 to 4 that economists recommend, with a sharp decline from 7.5 in the recent years. You ask how? Well, according to CRISIL, after the 2008 crisis, the overinvestment and underutilized capital started bearing fruits. Further, there has been an increase in the government's infrastructure spending, such as roads. The 7.8% GDP growth in April June versus the 6.1% in January March is mainly driven by strong domestic demand and coupled with the government's capex push. Beyond April June, the Indian Central Bank sees GDP growth slowing down sharply to 6.5% in July September, 6% in October December, and 5.7% in January March 2024 as the favorable base effect continues to fade. Now, to have an outlook, domestic growth prospects are strongly influenced by global developments. India has seized the opportunity of discounted Urals oil, which has increased Russia's share in its energy imports. Overall, Indian imports from Russia rose from US dollars 9.9 billion, which was 1.6% of total imports in the fiscal year of 2021 and 2022, to US dollars 46.2 billion, which is 6.5% in the fiscal year of 2023. Moderating demand and high inflation have slowed economic activity. Employment and wage estimates suggest improving labor market conditions in rural areas. Little sucker, the Consumer Price Index. The latest CPI data from NSO showed an easing in the pace of price gains from July 15's 15-month high, providing some assurance that retail inflation is under control. The Consumer Food Price Index is 10%, and 11 of the 12 items on the heavyweight food and beverages group of the CPI logged price increases, with oils and fats the sole item logging a year on year decline in prices, posing its first sequential increase in 9 months. The cooking staples of potatoes and onions were among the 7 items that continued to log sequential inflation. The near term inflation outlook is also made more uncertain by other factors, including a distinct deficit in monsoon rainfall. Unless CPI inflation decelerates by an incredible 250 basis points in September to a 4.33% pace, price gains are certain to substantially overshoot the Monetary Authority's 6.2% forecast for the July September quarter, leaving it with few real options to achieve its medium term price stability goal of 4% inflation. Direct investment into India. Even though there are active discussions about India as an alternative to China for investing, the latest data indicates that inbound direct investment into India is declining. In the fiscal year 2023, inbound foreign investment into India fell by 16.3% from last year. The net FDI fell 27% due to a drop in investments by US and Euro based companies. Some of the factors are the absence of large ticket M&A activity, which brought in US dollars 27 billion in CY 2020. The reasons are India's continuing high tariff and non tariff barriers, poor infrastructure, onerous regulation of the industry, and regulations meant to curtail China's investment, which unwittingly have the effect of discouraging investment from other countries. Some of the large projects have also not come up due to difficulty in procuring land or environmental and other clarifications. Nevertheless, India's government has taken steps meant to encourage more inbound investment like reduced corporate tax. Further, recent RBI census data indicated that the United States was the largest source of FDI in FY 2023, representing 17.2% of the total FDI. Regarding outward direct investment by Indian entities, Singapore, the United States, the UK, and the Netherlands were among the top destinations, receiving 60% of the total of Rs 9.1 lakh crore invested during FY23. It was also highlighted that the market value of FDI in India increased by 6.9% in rupee during FY23, primarily due to a rise in FDI in unlisted companies. Sector wise, the manufacturing sector continued to attract the largest share of FDI equity, both in terms of market value and face value. Let's move on to the GST collection. The gross GST revenue collection in the month of August 2023 is rupees 1,59,069 crore, of which CGST is rupees 28,328 crore, SGST is rupees 35,795 crore, and IGST is rupees 83,251 crore. The revenue was 11% higher than the GST revenue in the same month last year. Revenue from imports of goods was 3% higher and from domestic transactions 14% higher. The government has settled 37,581 rupees crore to CGST and rupees 31,408 crore to SGST from IGST. The total revenue of centre and the states in the month of August 2023 after regular settlement is rupees 65,909 crore from CGST and rupees 67,202 crore from SGST. An analysis of state-wise GST collection data for August 2023 reveals that the GST collection in Tripura recorded the highest year-on-year rise of 40%. Trade deficit. India's trade deficit has shown a considerable decline in April-August 2023. The overall trade deficit for April-August 2023 is estimated at US dollars 37.49 billion as compared to the deficit of US dollars 60.31 billion during April-August 2022, registering a decline of negative 37.85%. The merchandise trade deficit during April-August 2023 was US dollars 98.88 billion compared to US dollars 112.85 billion during April-August 2022, registering a decline of that is negative 12.38%. India's overall exports in August 2023 are estimated to be US dollars 60.87 billion, exhibiting a negative growth of 4.17% over August 2022. Overall imports in August 2023 are estimated to be US dollars 72.50 billion, exhibiting a negative growth of 5.9% over August 2022. Index of Industrial Production. For the month of July 2023, the quick estimates of Index of Industrial Production with base 2011 and 12 stands at 142. The indices of industrial production for the mining, manufacturing, and electricity sectors for the month of July 2023 stand at 111.9, 141.2, and 204 respectively. These quick estimates will undergo revision in subsequent releases as per the revision policy of IIP. The July IIP growth of 5.7% is above expectations of 5% on account of a better than expected performance of the manufacturing sector. The YOY performance of most available high frequency indicators improved in August 2023 relative to July 2023, including freight and electricity generation. Based on these trends as well as favorable base, the ICRA expects the year on year IIP growth to witness an uptick to 5 to 7% in August 2023. Credit offtakes. Credit offtakes refer to the total amount of loans being disbursed by banks to borrowers. It continued its upward trajectory with a 19.8% year on year increase. Deposits showed a healthy growth. The overall outlook remains optimistic with a projected growth rate of 13 to 13.5% for FY24, underpinned by factors such as economic expansion, etc., and increased capital expenditure, the implementation of the production linked incentive scheme. As of September 1, 2023, the short term weighted average call rate stood at 6.65% in contrast to 5.19% on September 2, 2022. This rise can be attributed to the recent implementation of incremental cash reserve ratio norms by the RBI, which extended pressure on short term rates. The credit to total asset ratio experienced a decline of 20 bps compared to the previous fortnight, settling at 67.0% for the fortnight ending August 25, 2023. Nevertheless, the year on year growth was approximately 70 bps. Meanwhile, government investments stood at Rs 59 lakh crore as of August 25, 2023, reflecting a YOY growth of 16.5%, but a slight sequential decline of 0.2%. With this, we conclude our monthly roundup of the Indian economy. I would greatly appreciate it if you could like our channel and leave your comments in the comments box below. Please subscribe to our channel and press the notification bell to receive the updates regularly.